I've also wanted to take a few minutes today to look at some pattern recognition. And while I really don't think that purely looking at patterns and only looking at chart patterns is going to ultimately be a success for the long haul, I do think you have to use a multi-pronged approach. This is an important exercise to do, and it is certainly integral to what we do as well. And I want to show you something today that I think is going to really help you try to understand from a pattern recognition perspective the similarities between something like gold and even Bitcoin. So let's have a look at this, and we're going to get right to the point here. And we could go into all sorts of complexity on this, but I think it's not all that necessary. But if you think about the reasons why gold and things like Bitcoin are going higher, there's a lot of reasons for, particularly on the gold side. But really, when it comes down to when we talk to our institutional investors, including our own views, really what we're seeing is a lot of diversification reasons, and due to basically monetary debasing or money printing. So that really seems to be the main driver for gold. There's various other reasons you can talk about, inflation or deflation scares. I know that's a completely different scenario, but funny enough, the odds are the sort of investors kind of split between those two views, and still both of them buying gold. So, but really at the end of the day, it comes down to a sort of a monetary debasing thing. And so, if we take this from a purely chart perspective, I guess you can see the following. So this is a longer-term chart of the price of gold, and what you'll clearly see is that there was a top in 2011, and then a drop, and then we had this consolidation period. And I should probably use something like this. And so the consolidation period after the blow-off top in 2011 resulted in this, what they in the technical side refer to like an inverse head and shoulders pattern. And of course that led to a big rise, and now we're kind of consolidating back at the previous highs, and I think ultimately we'll go quite a lot higher, to be honest with you, for the next 12 to 24 months. So that's the pattern. So again, a very steep move, corrective period, and that, well, to the downside, then a sideways move, if you will, to the lens of an inverse head and shoulders pattern, and resolution to the upside. Now, if you go over to something like Bitcoin, and I will say, I always do, we're not Bitcoin nuts or Bitcoin authorities, but it is interesting how the pattern kind of rhymes. So, and it's not exactly the same pattern, but it's not totally dissimilar. What you can see here is we, of course, had a big blow-off top in 2017 in December in Bitcoin, a corrective move to the downside, big retracement, and then this big consolidation pattern. But if you zoom in a little bit closer and you look at the price action after the last top, the lower high we had in June 2019, you're seeing a very similar type of price action taking place right now. And again, after the top in 2019, we had a move to the downside, which really can be looked at as an inverse head and shoulders pattern. And what we are now at, and I believe this is the point we're at right now, is we're just on the edge of having that next move to the upside. Now, timing with something like this is always quite challenging. This is not to say this has to happen tomorrow or the day after. This can take several months to play out for sure. But I do think from this perspective, after this consolidation period, and there's a lot of coiled up demand here for a potential move to the upside, and then just like in gold, the reasonable target would probably be that previous all-time high. In the case of Bitcoin, is probably about 20,000. So again, the pattern is not exactly identical, but the sort of underpinnings, not only of the reasons why this thing is rallying or why it's coiling up Bitcoin and why gold has moved higher, the reasons from that perspective are quite similar. And so we think this is now quite close to, again, moving to the upside, very much like gold has already done. So if you were to kind of, I'm going to quickly show you this, what it looks like if you were to overlay this chart. And it's a different time frame, but you'll see a similar, you'll see this similar pattern. Oops, that didn't work. I'll quickly do it like this, and then we're going to compare and overlay. Let's see. Compare I think it's at symbol. Let's just add GLD, doesn't matter. There you go. Okay, so now again you have the candlestick chart being Bitcoin and the orange chart being gold. And so again, just to kind of, I'm trying to show you this in different time frames, but so you can kind of see what this looks like. So again, the pattern I showed you before for gold was really this one, and I'll try to draw it in. Let's see here. We'll use this stuff here. All these different gadgets we have to draw lines. But you know, I drew it in kind of as like an inverse head and shoulders pattern kind of thing. But you know, you can draw it in many different ways. I'm just going to give it to you like this, and you know, you could probably also make the argument that this here was some sort of a thing. So all of this here, this bigger base, looks similar to what's going on right now in Bitcoin over here on the right hand side. That's my point, right? So different time frame, I fully understand that, but considering that the underpinnings, the reasons why these two assets are moving higher are very similar, I think this pattern here in Bitcoin is probably about to go to the upside. Again, it's not a call for tomorrow or the day after tomorrow, but really to the lens of a 3 to 6 to maybe a 12-month lens, and we could possibly see some explosive moves to the upside. So anyway, folks, I hope this is helpful. Give us a thumbs up, like, and comments down below if you have any questions, and subscribe and spread the word. I'll see you guys soon.